What's coming is more and more unpredictable. We could wake up any morning right now and find out that some hypersonic missile fired from some country that isn't us has hit another country that's not us. And now there's a war going that we have to be involved in one way or another because we have an alliance with somebody. And, that's the kind of thing you wake up. This is happening overnight while we're asleep. We wake up in the morning and we're in World War III. Very scary situation. And the only real obvious conclusion is that the prepping that we've been doing probably needs to be turbocharged.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 16th through September 23rd, 2024, while supplies last. This week we have a very limited supply of Pamp 1-ounce silver rounds at just $2.75 over spot per ounce. We also have 1-ounce gold Rand elephants from the Rand Mint in South Africa for just $59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend John Rubino from the very popular Rubino Substack, rubino.substack.com. John, thank you so much for joining us today.
Hey, Elijah. Good to be back. I hope all is well with you.
All is well with me, but all is not well out in the world when we look at geopolitics, when we look at politics here in the U.S., when we look at what the Fed did. We're recording this Thursday, and what they just announced yesterday, a massive rate cut and an easing cycle when stocks are at all-time highs, gold is at an all-time high. I guess, where would you like to start? It seems like we're in a very different world, as you mentioned in one of your recent articles. You mentioned how we're just in new territory.
Yeah, let's start with the really crazy stuff and then feed on over into U.S. monetary and fiscal policy, which is equally crazy in their own way. But yeah, I just posted a Substack on the difference between now and say 5 years ago. Because 5 years ago, you and I were doing videos back then, but mostly we were talking about a comprehensible thing. We were headed for a big financial crisis. All the bad debts we were taking on was going to lead to something that was fairly understandable. The currency starts losing value until it becomes disorderly, and then you have a monetary reset, and then you go on with a sound money monetary system, hopefully, if the right people win that argument. And more or less normality returns. But today's world, in just, half a decade, normality has really gone out the window for a lot of different reasons. Part of it is technological, and part of it is just a total breakdown in the global systems of governance and national political systems and everything. But a few of the things I pointed out in the Substack were, the Houthis didn't used to have long-range missiles, especially hypersonic missiles that can strike deep in Israel, but now they do. They just launched one that they said was hypersonic, and it blew up in Israel. Um, uh, let's see what. Oh, Israel, meanwhile, did not have the ability to make cell phones and pagers and things just blow up remotely, but they just showed that they have the ability to do that by wounding several thousand Hezbollah members and killing a bunch of them too. So now you basically got a new war front for Israel, where Hezbollah is retaliating for the attack on their communication system, and Israel is striking deep into Lebanon. The fact that you can blow up electronic devices remotely is something that's very new and very destabilizing. And let's see. Oh, there were two or three other things. Oh, okay. And presidential assassination attempts were maybe a once in every decade or several decade thing. And we've had two in just the last few weeks here in the US. And, it doesn't seem like the Secret Service protection that's being afforded to candidates like Trump and Kennedy it is adequate at all. And it looks like, in a lot of cases, either grossly incompetent or, purposefully incompetent, one or the other. And that's a very scary thing because you can't have multiple assassination attempts, one of which eventually is going to be successful on presidential candidates in major countries. If you want to be considered a real democracy, you don't murder or imprison the people who run against the powers that be, and that's where we are right now. So anyhow, you add it all up. There are other things too, but add those things up. And we're in a world that's very different from the relatively predictable one of 5 years ago. And this one is just unpredictable. I mean, we really don't know how. There was one other thing I forgot to mention. The Ukrainians didn't used to have missiles that can strike deep into Russia and cause the latest one that hit caused what the UPI said was an earthquake level explosion. So now you've got NATO weapons striking deep into Russia and causing massive implosions. The picture of it looks like a mushroom cloud. So anyhow, yeah, we're in a really dangerous place, and it really has a spinning out of control kind of vibe to it. And this is kind of pre-World War One, really where everything seemed okay, and then all of a sudden one thing happened and another thing happened, and everybody got sucked into some gigantic war that they had no intention of being involved in a year before. And we're kind of there right now, where Russia is seeing its citizens be killed and its infrastructure be broken up by NATO weapons. So what is it going to do to retaliate? It certainly has the ability to do so. And the neocons running the US government are kind of hoping that'll be the case because they think they can win a nuclear war against Russia. And this is all happening during a presidential campaign when the sitting president is a dementia patient who has no control over what his government is doing. The vice president is running a campaign where, to the extent that she's in front of people at all, she's traveling around, to do canned interviews and things like that and make speeches. So there's basically nobody that we can point to who's running the government, which means the people who are running the government, as we drift into World War III, are those shadowy figures who actually want World War III, because they're unaccountable. We can't vote them out of office because we don't even really know who they are in many cases. So yeah, this is a very scary time. And it's one in which it's very hard to invest accordingly. Like what exactly do you want to own to get out in front of this? Obviously gold and silver. I mean, everything comes back to precious metals and has for the last 20 or 30 years. Because those are the kinds of money that will replace the failing fiat currencies. So whatever happens, I mean, short of an actual nuclear exchange, okay, because then all bets are off. But whatever kind of geopolitical craziness happens, whatever kind of crazy monetary policy that happens going forward, and you want to be in real money because the stuff that I just mentioned, all the crazy geopolitical stuff that's happening, is coinciding with a failure of the world's fiat currencies. So, boy, complicated times. And in those kind of complicated times, you want as much certainty as possible. And I think for most people, that's a distant hope. But actually, my Substack newsletter is kind of premised on the idea that we should be looking for actionable ideas to protect ourselves and give ourselves some resilience based on what's coming. But boy, it's becoming a tougher proposition as the really crazy things pile up out in the world. So that for a lot of people, I don't really know what the solution is.
No, it seems like when there's, geopolitical conflicts or, world wars, they can often like cover up the other issues happening in that country, right? So when it comes to a possible world war, do you see this being kind of a cover up or an excuse for maybe some economic issues we might be seeing in the near future? Do you think it could be a distraction? I mean, I remember when the Ukraine war happened, suddenly COVID stopped, right? So it's interesting how just, this shift in narrative that the media can do. Do you think it could, more wars or an escalation of wars could distract us from economic hardships we might be seeing in the future?
Oh yeah. I mean, that's a very common strategy for an incompetent government. They screw up their domestic situation, and then they start looking abroad for an enemy that they can use to scare their population into not paying attention to the mess that's been created by the government. And yeah, I think you could see the last decade, at least since the 2016 election, um, as one thing after another designed to spook the populace into not paying attention to the mess that the aristocracy has created here. So yeah, I think the pandemic could be seen as a manufactured crisis designed to make people malleable, and even if it was just an experiment to see how easy it is to do that, turns out it's pretty easy. I mean, half the population in the U.S. totally bought the pandemic scam, and we're willing to do and put up with authoritarian policies that under no circumstances are constitutional, because they were so terrified of, I'm not going to say a made up disease on YouTube because that would get you in trouble, but something that wasn't nearly as serious in retrospect as they made it out to be early on. And why did they do that? Okay, and then right after that, you're right. The pandemic ends and the Ukraine war starts. And oh, we've got a new Hitler out there, but you know, the battle is on the border of the new Hitler's country. It's nowhere near us. It involves us in exactly zero ways, except that we would like to induct the Ukraine into NATO, which is an anti-Russia military coalition. And so we want basically a missile base on the border of Russia, and they're not having any of that, obviously. Look, go back and look up the Cuban Missile Crisis. It's the exact same situation in reverse, where Russia was trying to put missiles in Cuba, and we were willing to fight World War III to prevent that. Well, we're in the same situation now, except it's Russia who wants defensible borders, and us who's trying to take that away from them. So um, there, there, there are several geopolitical objectives here, probably. One is we want Russia's resources because they have a lot of oil and they've got a lot of everything else, including uranium. So they're an energy powerhouse. And they own a lot of gold, and they have a lot of gold mines. So it's in the interest of the U.S. neocons who want the U.S. to rule the world for the next 1,000 years to take over as many big areas, resource-rich areas as possible. And they see Russia as a candidate for that. If we can just destabilize Russia's government and then go in and take control of the next government and make them a puppet state, then we get all those resources. So they see that as a goal. And another goal is basically just to remove a big competitor from the global chessboard. And the third is to spook the populace into obeying. And you can have an action that has multiple objectives. And I think in this case, there are several things that the aristocracy hopes to get out of starting a war with Russia. It's those three things and maybe a few more. And, risking World War III with a nuclear power for any of those things. I mean, yeah, Russia has a lot of oil, but oil is a fungible commodity. It has to be sold on the open market in order to have any value. And then the price of oil is just what it is, no matter who's selling it. So I don't think it benefits us really in any way, economically. And of course, it benefits us a little bit militarily if Russia is weaker because it doesn't have the oil to sell, but not at the cost of a nuclear war. And anyhow, that's where we are. It's a very scary world, and it's getting harder and harder to put together a coherent plan to gain resilience during what's coming, because what's coming is more and more unpredictable. We could wake up any morning right now and find out that some hypersonic missile fired from some country that isn't us has hit another country that's not us. And now there's a war going that we have to be involved in one way or another because we have an alliance with somebody. And, that's the kind of thing you wake up. This is happening overnight while we're asleep. We wake up in the morning and we're in World War III. Very scary situation. And the only real obvious conclusion is that the prepping that we've been doing probably needs to be turbocharged now. We need to accelerate whatever plans we had, if it's for water storage or to get that garden going so you're 50% food self-sufficient, or to stack those silver coins so you've got a sufficient number, however you define sufficient. If you're not there for any of those things, it might be time to take on a new sense of urgency in all of this and really get going with it.
Now, when it comes to what is happening here domestically in the financial system, yesterday we saw the Fed raise or cut interest rates by 0.5%. Now, it was a lot of people were expecting 0.25%, other people were expecting 0.5%. But I think it does kind of raise alarm bells, right? That the Fed is choosing the larger cut in interest rates, right? That they might be seeing something on the horizon. What is your perspective on that? Why they chose to cut interest rates so aggressively? And do you think there may be signaling or concerned about the current state of the financial system?
Well, yeah, there's a couple of ways of looking at a big move on the part of the Fed. And one is that they're panicking because what they see is much worse than what we see. And that's a possibility. Okay, so let's say that's possible. They're seeing consumer spending numbers and employment numbers into the future based on their models that are a lot less favorable than what we've seen in the last year. Because, realistically, in the last year, the government has lied about a lot of this stuff. Well, if the true numbers come out eventually, and they do have to, maybe they're going to be a lot worse than a lot of people think. And the Fed wants to get out ahead of that with easy money. That's possible. One other possibility is that it's an election year. The Fed works for the government. It's owned by the big banks. So they want to keep the incumbents in power because the incumbents are the ones who appoint Fed governors. And those guys would like to keep their jobs. So they're doing that. They're having easy interest rates or lower interest rates leading to higher financial asset prices just as people are making up their minds about who to vote for. So that's possible. Oh, that's kind of late for that. They probably should have done that 6 months ago if they actually wanted people to have an embedded sense of well-being about the economy, because I think it's kind of late. Most people have already formed an opinion that the economy is not good, cost of living is too high. It was better 4 years ago. So anyhow, that's a possibility, though. And the third possibility is that just central banks like lower interest rates, and they may have felt that they kept interest rates as high as they could for as long as they could, and it was going to get disruptive politically and financially if they keep them higher, even in the face of the stock market rocketing and house prices being unaffordable for 70% of the population and the unemployment rate being, I don't remember what that is, but it's 4 point something, right? It's very low. Back in my day when I was growing up, 6% unemployment was a pretty good unemployment rate, and now 4% or so is um, is considered the highest acceptable, and then we have to ease when it gets to that level. So, yeah, so it could have been any of those explanations, and it really doesn't matter in the big picture because the world is being forced to use excessively easy money in order to manage all the debts that we've taken on. You can't have trillion or tens or hundreds of trillions of dollars of debt, depending on which country that we're talking about, because normal interest rates means a rising and debilitating cost of interest on the debt that you've got out there. So your interest rates can go up for a little while if they need to go up in order to stabilize some aspect of the economy, but they have to come right back down because otherwise the interest cost eats governments and corporations and to an extent individuals alive. It destroys the economy by making a growing number of entities insolvent. So we always had to have lower interest rates again, and maybe this is just when it has to start happening because they've run out of what they consider to be runway, with the higher interest rates. So, whatever the cause, interest rates going back down from here carry with them some pretty serious risks. And one is that, well, we found out what extremely easy money does during the pandemic when we increased the money supply dramatically and we kept interest rates low. And in 2022, we got double-digit inflation, almost, according to the official numbers in the US. And in real terms, most legitimate estimates of inflation have it at 12 to 15% in that year. And that's destabilizing. When people see their cost of living go up by a third in the space of 3 or 4 years, um, something called the trust horizon just shrinks down to nothing. In other words, people just give up on the government because they feel like they've been screwed over by policymakers because their lives got so much harder. And then they become unmanageable. You get a populace that's basically ungovernable at that point. And we did that once. And people know it can happen because it happened in recent memory. So when the government starts lowering interest rates again, and they're going to have to, they're going to have to get back down close to zero in this cycle. Um, when they do that, it's liable to ignite inflation again. But this time around, people won't be surprised by it. They'll be prepared for it because it just happened, and they're not going to let it happen again. So, if we thought the hoarding that happened, for instance, in 2022 and 2023 was bizarre, wait till you see what happens this time around. As soon as inflation ticks back up to 5 or 6%, which it will do if we keep borrowing $2 trillion a year and having to pay interest on that while we're cutting interest rates for everything else. If that happens, then you really risk the system spinning out of control because higher inflation becomes a self-fulfilling prophecy via inflationary expectations. And that's what you risk when you keep interest rates too low for too long, run deficits that are way too high for the state of the economy, and just generally encourage more debt to be taken on. So we're creating that risk, and we're creating it in the not too distant future because already, if interest rates drop by, say, 100 basis point, in other words, 1 percentage point, we're already getting back into historically low interest rate territory because interest rates right now are not historically high. They're actually kind of normal, but you can't have normal interest rates without causing a crisis. So we have to get back down to unnaturally low interest rates. And we got to do it pretty soon. So I think the 100 basis point cut by the end of the year that a lot of people are talking about is completely possible. And then more in the year after that. And I think at some point it starts to be destabilizing. And then there's no tool left to fix it because our debt will be that much higher, which means our interest costs will be that much higher if we try to raise interest rates again. So once people figure out that the Fed has no tools left with which to fix a destabilizing currency system, that's when everything blows up. And it's completely possible that it happens in the short rather than long run.
It is interesting times ahead, it seems like, and it seems like gold is really reacting to this or has anticipated these rate cuts. We've sustained record high levels for many months now, and now we're heading to $2,600 gold. Your take on that, and where do you see the precious metals going maybe towards the end of the year?
Well, in the near term, it's impossible to predict where any market goes. And so in the next 6 months or so, for gold and silver, I mean, they could spike from here or they could get smacked. If we have a recession that turns into an equities bear market, then that'll be bad for gold and silver in the short run, probably. There's always the chance that gold goes up because everybody's so worried, but historically, gold and silver get whacked when equities get whacked. For a fairly straightforward reason, which is that when you're getting margin calls on your tech stocks and all of a sudden you're in danger of your brokerage account just closing you out because your equities are going down so far so fast. You got to sell things that haven't gone down very far and very fast yet, and that may be gold at that point. So your gold is holding up, and that's what you sell. So then you get a gold bear market or at least a flash crash. That's completely possible. But there's some big wins at the back of the gold market right now, and the biggest is central bank buying. Central banks around the world, they see what we're talking about right now. They see this stuff coming, and they don't expect U.S. Treasury bonds to be good stores of value over time if the U.S. dollar is going to be a victim of the next financial/currency crisis. So they're cashing out their treasury bonds and they're buying gold because they assume gold is going to hold its value better in the long run than a currency that's being inflated away by its government. So, and you've seen the central banks of the world buy 1,000 tons of gold in each of the last 2 years, which is a big number in a market where the mines of the world produce maybe 4,000 tons. That's a huge new buyer coming into the market that wasn't there before. Um, so should that continue, and it has been continuing on and off so far. Russia, for instance, just announced that it was going to aggressively increase its gold buying. China comes in and out of the market now, but it's been one of the big buyers lately. And then lots of other countries are continuing to buy. So let that continue. And that kind of puts a floor under the price of gold, since the central banks seem to be non-price sensitive right now. If it goes down, they'll buy some. If it goes up, they'll buy some, whatever. And that's a good thing for gold. And another good thing for gold is that you're seeing increasing buying of ETFs, which means that investors now that haven't been very big buyers of gold for quite a while are starting to buy via GLD, and although that's not the one they should be buying, but there are other gold ETFs that are seeing inflows too. And that's another very positive thing, because that gives you pretty wide-ranging group of people out there between central banks and high net worth individuals and regular people buying ETFs who are, all getting on board with gold right now. And so I think if there's a flash crash, it'll be a V bottom like we saw in 2008 and 2022, where, yeah, precious metals tank along with everything else, but then they take off when central banks respond to an equities bear market with much easier money. So that's probably the worst case scenario for gold, is that you have a V bottom flash crash, which then turns into the next leg of the bull market. Now, silver is kind of a slightly different story, because it is a monetary metal which moves with gold in general over long periods of time, and it's a industrial commodity that is seeing rising demand because of solar panels. Solar is a growing part of the energy sector, and most solar panels contain a little bit of silver. So the more solar panels we put up, the more silver is demanded. And that one source of demand is like 1/4 of all industrial demand right now. And that's from virtually zero 5 years ago. And then you've got AI, which is this huge boom. Everybody's putting up new data centers out there with new, microchips that they've got to buy to run their new AIs. And there's a little bit of silver involved in those microchips too. So that's another big source of demand for silver. So even if it wasn't a monetary metal, it would probably be like copper. It would be something that is the next generation energy metal that is kind of sexy because of that. Energy transition, yada, yada. And silver would be a big part of that. But it's also a monetary metal. So you take those two things and put them together, and then add in the fact that silver is nowhere near its all-time high. Its all-time high is around $50 an ounce. It's $30 an ounce right now. So gold is far above its previous cyclical high, and silver's nowhere near its previous cyclical high, which means the gold to silver ratio is pretty high right now. It takes a lot of silver to buy an ounce of gold. Those are usually bullish signs for silver. So I think that silver might be the one of the big winners in the coming decade, just because somebody's going to be buying a lot of it for one reason or another, and there's really not that much out there. It's already in a deficit. In other words, mines don't produce enough silver to satisfy current demand. So let the deficit turn into a shortage where the metals exchanges just don't have enough silver to deliver when people who hold long futures contracts want actual physical silver instead of cash. And then you have the possibility of, on the one hand, a nice long bull market, and on the other hand, a panic situation where COMEX or somebody like that defaults. And then people realize there is no more free silver out there, and then they buy it for whatever price they can get, and it just goes straight up. I'd give those two possibilities 50-50 right now. Either one is quite possible, and I don't know which one is more probable.
Will definitely be interesting to continue to track this with you. As you mentioned, it's very difficult to predict, the coming months in the markets. And if there is a recession, we definitely could see a pullback in metals. It seems like, though, over the last couple months, it's amazing how strong gold has been and how it's, even during the pullbacks, it's really recovered quite fast.
Yeah, it's been a buy the dip market in gold, because it's easy to look at what it's done lately and think, all right, it's overbought, it's due for a correction, and that would be totally legit by looking at the charts and everything. But I think a big part of it is those new buyers coming in. You could have a bit of FOMO going on now in the gold market, fear of missing out, because a lot of people have had gold. And, I talk to a lot of people who are in this boat where, gold's on their radar screen. They've been told to look at it and everything. But maybe they bought a little Barrick stock or something like that, or they bought a few silver coins or whatever. They don't have anything like what you would have if you were actually moving into that sector. And so they're spooked right now. They don't know what to do because it's been going way up. They feel like they've missed this move and they don't know whether to jump on board because they'll never have another chance at today's prices or pull back and wait for a dip. I think both of those things are valid points of view since the future is inherently unknowable and both of those possibilities exist. But I think a lot of people, which is the way human nature works, is a lot of people are starting to panic buy in gold right here. And the central banks have just been steady buyers, like I said. So it could be that they're just not price sensitive, even at $2,600 an ounce. They're making this policy decision to move out of treasuries and into gold, and they're going to do it at whatever price it takes to get to their preferred percentage. So, all of this is true. It could be that central banks are just not going to be price sensitive all the way up to $5,000 an ounce, or it could be that we get a huge correction when equities tank. And what that means is you should just dollar cost average, trying to predict a market in the near term, whether it's equities or houses or precious metals or any other commodity, is just, it's beyond the ability of a normal person because those markets are full of professionals. And if they can't come to a consensus about what's going to happen in a market, in other words, if there are people on both sides of the argument in that market, and those people are professionals, you can't watch somebody talking on YouTube and then make a rational decision about timing that market because nobody can really do that. Or if somebody can do it, they're not telling anybody. They're just getting insanely rich very quietly. So I think, and what I say in my Substack over and over again is use low ball bids for corrections and then just dollar cost average otherwise. Just put X amount of dollars per month into something that you want. In other words, either in a mining stock that you like or silver coins or gold coins or whatever, and just buy that much each month. And then really don't worry about prices. If the price goes down, then that fixed amount of dollars will buy you more metal, more shares of Agnico Eagle or whatever. And if the price goes up, your fixed amount of dollars will buy you fewer shares. So you end up with a pretty good average price over time. And I think that's the most rational approach. And it's also psychologically really, it's comforting in a way because you're going to buy some in the future, but you have some and you're going to buy some in the future. So if the price goes down, that means you're going to buy less and you feel better about your future transactions. And if the price goes up, you're not going to buy as many ounces, but what you own in the moment is going up in value, so you feel good about that. So it gives you something to focus on that's positive, no matter what's happening in the world. And that, the value of that can't be underestimated in investing because, things are always happening out there. Some of it's good, some of it's bad. And if you focus on the bad things, there's always a bad thing to obsess about. But if you focus on the good thing that's happening, then there's basically always something that you can look at and go, all right, I made a good decision with this one thing right here, and you feel better about it. Otherwise, investing will drive you insane, because it's incredibly humbling and incredibly stressful. And you make a couple of big mistakes, and then the impulse is just to leave forever and just assume you just can't do this thing. And dollar cost averaging helps with that, because it always allows you to be proud of something that you're doing and optimistic about something that's coming. And so you can be basically happy as you build up your stacks of gold and silver coins and your portfolio of mining stocks.
Well, John Rubino, we really appreciate your time today. If our viewers are interested in learning more, they can go to rubino.substack.com, which will be linked in the description. Can you tell us a bit about that and any last thoughts you had?
Yeah, that's a newsletter that is actively looking for actionable ideas. In other words, we know all this crazy stuff is coming, but what do we do specifically about it? And it's got kind of a wide scope in that sense. A lot of health-related things, a lot of prepping stuff like water storage and wood stoves and things like that. Things that help you get through bizarre times when the big systems don't work that well. And so far, so good. It's a 2-year-old newsletter that has a really interesting community building up around it.
Fantastic. John, once again, thank you so much for your time, and God bless.
Thanks, Elijah. See ya.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 16th through September 23rd, 2024, while supplies last. This week, we have a very limited supply of Pamp 1-ounce silver rounds at just $2.75 over spot per ounce. We also have 1-ounce gold Rand elephants from the Rand Mint in South Africa for just $59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.